Okay, let's getting ready to go live here, folks. If you're just now joining us, we're going to wait for everybody to get on board. Let's kind of test our mics out. I know last time you caught our webinar the last time where the mics were not working well, so I'm doing some tests here. Heather, welcome, by the way.
Thank you very much. Glad to be here.
Yeah, in fact, we did something. They didn't give us I got my favorite son-in-law at the helm here. We gave him a bobblehead if somebody would say the sound was okay. So if you're watching and you want to give some feedback to Trey over here, if the sound sounds good, give us an amen or something and you can hear everything clearly. And if you'd like to give us your address, we'll get you a Tony Walker bobblehead. Where's that bobblehead, Aaron? There we go. Let me grab it here.
Lisa Howard said the sound is okay.
Oh, Lisa Howard. I know who Lisa is. There you go. Well, Lisa, she may already have a bobblehead. She's been to a workshop before. So again, we're going to wait for everybody to get up. We've got a great webinar, folks. We've already, with us is Heather Schreiber from Atlanta. And we've already recorded a radio show today for later play. TV show, we've already got that out of the way.
Check.
You've got a workshop later today. So folks, I don't know if it's not too late to sign up. We've got a 2 o'clock workshop in Louisville today that Heather will be giving a lot of information. It's going to be over an hour long. We've got a 6 o'clock workshop tonight. And then tomorrow in Bowling Green, a 2 o'clock workshop. So if you like what you hear here, maybe you've got some friends or family that really need to hear about Social Security, you're in for a treat because we've got one of the renowned experts in the country that's going to be with us today sharing information. And I think it's good to note too, Heather, that Heather is not in sales. Technically, all financial advisors are in sales. We like to say that. Somebody's always selling something. You are truly a consultant. You go around and help people like myself and then can act as a consultant, correct?
Correct. I am actually love what I do, not in sales. I'm here to be an additional resource for topics like Social Security, where it can be very complex. And so my role is to help financial advisors and consumers navigate that decision better.
And based out of Atlanta, Georgia, I understand. But you've
Based out
got
of
roots in Louisville. We're doing this one in Louisville.
Born and raised.
Wow.
So, yeah, so
That's
my
cool.
sister has been here with me, and it's been a great trip.
You said you went down to the Seelbach Hotel. I know you told me, but tell the audience why you did a trip down memory lane there, because this will fit in, folks. Hang in there with us. This is good stuff.
So the Seelbach Hotel has special meaning for our family. We have a great grandfather who worked there from 1912 to 1962 for 50 years, never missed a day of work. He was a
This is Seelbach today, right?
That's
okay.
Today. That's a picture I took. But he worked there for 50 years, never missed a day of work.
Retired. Yeah, look at that.
Yeah,
that's cool, isn't it?
That was when he would have been there.
That's awesome.
Retired January of 1962, and he passed, unfortunately, in August at the age of 65. So he was one of those folks that didn't really collect Social Security for very long, unfortunately. But rich history for us here. Well,
and I think let's kind of get into it here. And again, welcome, folks, if you're just now joining us. I'm Tony Walker, owner of Tony Walker Financial. We are a full-service retirement planning firm. And again, with us for about the next 25 minutes or so is Heather Schreiber, whom I met at a conference. She was one of the speakers. I'd never heard of Heather Schreiber. Don't take that personally, but I heard I went, oh my gosh, I got to have this young lady speak. She is so knowledgeable on the subject of Social Security, taxation. Of course, we remind you at Tony Walker Financial, we have a full-time person, Lisa Allerkamp, who's also certified in Social Security planning. But we still use Heather as a resource because there are some questions and issues that come up. You've done this, what, 25 years or something?
25 years.
You've probably seen it all, haven't you, in this area? So what we thought we'd do is get right into it. I really want to talk about this whole notion of just Social Security, its solvency, how healthy it is. You talked about your great-grandfather. My grandfather retired from Bell South in 1978. They didn't worry about Social Security and possibly going broke or running out of money. This article, in fact, Heather, I noted here, it says that they think the trust fund will be depleted in about 2035. Just give us your take on the whole thoughts of Social Security in general and its solvency.
Well, when our grandparents were retiring, the life expectancy was a lot less. So they were receiving benefits for a much shorter period of time. So some of that is due to that. Longevity has absolutely increased. I think we'll talk about that. The most recent report, like you said, says that the trust funds for Social Security, if nothing changes, will be depleted in 2035. Now, that doesn't mean that there will be no benefits paid. What that means is that they'll be able to pay about 77% of promised benefits. Does that command change? It does. And the Board of Trustees in the last few years, in their final synopsis, they say, changes need to be made to make this, to bolster up the funds, because we've had so many baby boomers retiring that's sort of put a strain on the system. Do I think it's not going to be there? Absolutely not. I think that it will. Could it change? Yes. In fact, as I told you earlier, Steve Goss is the chief actuary for Social Security. And if you have time to do it, Facebook, I follow Social Security online. Go to Facebook online and look up Social Security Administration, because they have a wonderful, it's about a 45-minute State of the Trust Funds address by Steve Goss. And it's worth listening to, because he really sort of sets your mind at ease about what's really going on behind the scenes. And most reports say that the folks that are retiring or approaching retirement really have nothing to worry about. It's those younger generations that things may change. They may increase the full retirement age. Right now the oldest full retirement age is 67. Could it be 68, 69? That could be one of the things that change. Delayed retirement credits, could that change from 8% per year down? But I really think it's going to affect the much younger generations. And as longevity increases, people are going to probably work longer, so they have more time to save.
Well, that key word longevity, because like you said, when Social Security was first enacted into law in 1935, I don't think the politicians were that dumb. They didn't think anybody's going to live past 65.
Exactly. Right.
So let's kind of take a look at this graphic you put together, because this is good stuff. And also remind the viewing audience here that it's not in many cases just one person. Social Security involves that couple and two people. So if you would address that as well.
So, what you're seeing here is, if I took this directly from Social Security's website, they're saying that the average 65-year-old male today lives to be about 84, the average female to age 87. That's a good place to start. And certainly, so life expectancy is a critical component of determining when you should file, whether you should file early at 62 or file as late as age 70. The issue with relying on this exclusively, especially if you're married, is the fact that you have to be thinking about longevity from a cumulative lifetime standpoint. What do I mean by that? Well, if I look at that same average 65-year-old, I took this on the right-hand side, the average 65-year-old, these are really boring people. They were born on the same day. They're both 65. What is the likelihood that that male will be still alive at 95? 16% chance that he'll still be alive. There's a 25% chance that she still will be, even though the longevity is 83 and 87. So you really have to look at cumulative lifetime, and particularly when you're dealing with a disparity in income benefits, which is often the case, right? We have one spouse that has a fairly high benefit because they've worked their entire career. We might have another one who took some time off, left the workforce. I did that for a little bit. I wanted to raise my boys. So I left. And so now I'm trying to play catch up. And I think we'll talk about, the more you work, the more it's going to increase your benefit. But when you're dealing with a disparity, you have to look at this and say, gosh, even though the higher wage earner might think that they're going to live a compromised lifetime, if they file early, that will absolutely have a profound effect on a surviving spouse that has a much lower benefit. And so you have to think about that. That's my caution there.
And then one thing, we're going to jump around a little bit because of just in the essence of time. Incidentally, folks, we're going to be taking your questions. We're going to have about 15 minutes worth of time for questions immediately following this in a few minutes. So as Charles Stanley said, a short pencil is better than a long memory any day. You better write it down if you're thinking of a question now. Trey, what's the best way? They've got access to just go right to you and you can
use the Q&A feature or the chat feature.
So chat feature or the Q&A feature there, if you'd like to send us a question, and we'll be happy to answer those questions. This gets confusing sometimes. I want to use an actual case. We talk about full retirement age. A lot of people will come to me, Heather. Let me use this example. He or she is 62. They sit down. Tony, you know what? I've worked hard all my life, partner. I want to retire. I don't know about this full retirement age thing, but can I draw Social Security now at 62? Break-even points, all this stuff kind of comes flooding in. They've touched on things, but they really don't know what that really means. Let's start with full retirement age. What does that mean? And then when you hear these break-even discussions, and then the problem, if you do take it at 62 for that survivor, maybe walk through a few scenarios real quick.
So the first thing I'll say is everyone should know their full retirement age because they're not all created equal. They're based upon your date of birth. I don't know if we have that up. But
that's okay. Yeah.
So 1943 through 1954, those folks.
There you go.
Okay, here we go. Those folks have a full retirement age of 66. What is full retirement age? Well, that's the age at which you get 100% of what's called your primary insurance amount. That's based on your highest 35 years of earnings. If you take it at that point, you're guaranteed to get 100% of your primary insurance amount. Of course, when you start taking it earlier, you're taking it theoretically for a longer period of time, so there's a reduction. If you're an age 66er, you're going to get a 25% reduction if you elect to take it at 62, like this example. So talking about that break even means how long do I have to live for it to make better sense for me to take it at 66 versus 62, or 67 versus 63, whatever that is. But again, that's a good place to start, but it isn't the end all be all. You really have to look holistically at how to make that decision. I think we'll probably talk about that when we get to taxes.
Yeah, and I know this rubs you the wrong way and it does me. I guess I've been doing this 35 years, 25 years. I'm a specialist in my area. You know what I've learned in this world of finance? There is no one size fits all.
There absolutely isn't.
And the dogma out there sometimes, I don't care what it is, whether it's, the only thing you should buy is term life, max out your 401k. What is the dogma you hear sometimes in Social Security that you say, boy, just be cautious before you give us some examples of that?
So you're going to have one of two camps usually. You should file at 62 because it's not going to be there. Or, you've earned this, so just immediately go file for it. Or the other camp, everyone should wait until 70. If you hear those kind of dogmas, you need to run because no one is the same. Not every situation has different different income needs in retirement, has different amounts of assets that they've set aside to complement Social Security. So it really is, life expectancy, all of those things go into that. So no one should ever give you a standard pat answer of you should do this or you should do that. It really is something you need to sit down and look at everything holistically and then make that decision.
And in the essence of time, because I really want to cover this, so let's give them an actual example. So folks, a lot of times with Social Security, it has its own tax bracket. So if Megan, I know she's operating the slides, if you can throw it up there. So let's maybe give them an example of holistic planning and just rushing out and yanking stuff out in Social Security. Talk through this graph with our viewers.
This is a good one to talk about because a lot of folks aren't aware of the impact. They think, well, I've paid into it the whole time. I paid taxes. Now you're telling me I might be paying taxes when it comes out.
On
so
the
let's
Social
talk
Security.
about on Social Security. So there's something, it's a two-step process to figure whether or not you have to pay taxes on any portion of your benefit. The first is what's called this provisional income calculation. It's a function of three things. It's your half of your Social Security benefits. So that means if I'm taking my benefit, my husband is, we're combining that total, dividing it by 2. That's part of this calculation. Plus adjusted gross income for the household, plus non-taxable interest. So things like municipal bond interest, if that's something that you've invested in, normally is federally tax-free. For this purpose, it's in here.
And let me ask you this, Roth income would not be in
Roth
this.
income, you're getting ahead of me
That's
here,
right,
right?
but I love
Roth
talking about
income.
these Roths.
Now, Roth qualified distributions from Roth IRAs are a beautiful thing when it comes to taxation of benefits because it's not taxable. All those deferred earnings on a qualified Roth distribution are tax-free.
Will not affect this.
Will not affect this, right? So once you've gotten this number, then you have to say, okay, am I married filing jointly or am I single? And if you're single, if that figure is less than $25,000, you're free and clear. You're not going to pay taxes on any of your Social Security benefit. If you're somewhere between 25 and 34,000 single, right here, you're going to pay taxes on as much as 50%. Now, it doesn't mean you're paying a 50% tax. Some people get confused by that. I'm going to take, if I have $20,000 of Social Security income, 10,000 of it is going to be included as a taxable line item on my taxes. If I'm above that and I'm single, above 34,000, as much as 85% can be taxable, can be subject to tax. The same holds true for married couples, except it's slightly more generous in the levels of income. Notice it's not double, right? But it's slightly more generous. These numbers are not cost of living adjusted, meaning they've been like this for years.
So that's one way, and indirectly they're getting more revenue, right?
Absolutely.
When you think about it.
They absolutely are. And this is one of the biggest reasons why holistic planning is so important, because what kind of plans do your clients have?
I mean, the majority of people have 401ks, Heather.
Right. And so what happens at 70 and a half?
They've got to take money
They're
out.
having to take distributions.
I call it the tax tumor, by the way.
Right. The tax tumor. They might delay it till age 72 here shortly if the Secure Act goes through. But at 70 and a half, and as it stands now, people are forced to start taking distributions whether they want to or not. And for the majority of folks, those traditional IRAs, the qualified plans are all taxable income. Does that affect this number? It does. So are there plans that we can put in place to maybe mitigate that before we get to the place at which we're taking Social Security?
Yeah, great. This is good stuff. I tell you what, anything else you want to cover real quick? Because we've got questions coming in here, Trey. We've got a ton of questions. Again, one more time, Trey, if you want to send a question in, we'll try to get to it. Use the chat feature or the Q&A feature. Okay, so let's see what we got here. Heather, first question. Megan's been over there typing these up. All right, Heather, can I file for spousal benefits and delay my own?
Of course, that's a loaded question, and it depends. So this is for someone who obviously is is entitled to spousal benefits, also has their own retirement benefit. If the general answer is if the spousal benefit is greater than your own retirement benefit, then absolutely. If your spouse has already filed and you're entitled to a higher spousal benefit, absolutely, you can claim that higher spousal benefit. If the question is, can I first file for my own, for my own, or rather the spousal benefit first, delay taking my own, then that answer depends upon when you were born. There's something called restricted application. And if you were born prior to January 2nd, 1954, that's a critical date, then yes, you could, at full retirement age, file first for spousal benefits or even ex-spousal benefits if you are eligible, and then later file for your own at age 70. Why would you do that? Well, you're getting, that's 50% of a spousal benefit based upon their primary insurance amount, and then you're letting your own earn those delayed retirement credits.
Makes sense. Okay. Got another one, Megan? Yep, here we go. My husband will turn 65 in the year 2020. Which should he register with Social Security? Is that the correct question? Is that
Well, I think that
what? When? Okay. My husband will turn 65. Okay. When should he register with Social Security?
So I think that if I can read
Okay.
between the lines
All
here a
right.
little bit, 65 is a critical year for what? For Medicare,
Yeah.
right? And so a lot of people think, okay, I need to file for Medicare. For most folks, their open enrollment, their initial enrollment is 3 months before they turn 65, the month of turning 65, and 3 months after. They have 7 months to do that. You need to file for Medicare, okay? That doesn't mean, however, that you have to file for Social Security. And a lot of folks mistakenly make that decision and get themselves into some trouble, especially because A, it's not their full retirement age, and B, they might be working, and that could cause a problem. So you don't have to register for Social Security, but you do need to be mindful of the initial enrollment for Medicare,
Yep.
which does fall at age 65.
Okay. We got another one, Megan. My husband recently passed at the age of 64. I am 62 and just started collecting my Social Security benefits. What benefits am I eligible for? I guess they're maybe referring to the
Maybe
husband.
the survivor benefits?
Yeah, maybe let's assume a husband maybe didn't
Okay.
collect. I'm saying let's go with that.
Well, let's assume, okay, we don't
Yeah.
know if he collected or not. So let's assume for a moment that he died at 64, never having taken the benefit.
Okay.
Because I get this question a lot. So because he died, he never took it at 64. Does that mean the survivor income is based upon what his benefit would have been at 64? The answer is no. Social Security doesn't penalize him for dying without ever having collected. So his base amount, the survivor base amount, is based upon what his benefit would have been at full retirement age. Now, in this case, she's already collecting her own benefit. So what I would say is if the survivor benefit is going to be higher than her own, she can collect 100% of that survivor benefit, whatever that base amount would have been at full retirement age for him, if she waits until full retirement age to collect it. So let's just assume his benefit is much higher. Suppose she's collecting $1,000 under her own record and his survivor benefit is worth $2,200. What I would suggest, if it's at all possible, is to continue taking her own retirement benefit, waiting until her full retirement age so that she can collect 100% of that $2,200. Now, she could collect it at 62. She could switch over, but she would get a reduced survivor benefit because she's taking it early. So that's one of the planning opportunities with survivor benefits in particular, that you can gauge which one is going to, from the long term, give you the higher benefit and hold out to collect that one second.
All right, very good. And we got plenty of time here, so this is great. Keep the questions coming, folks. I've never worked outside the household. Now this, I mean, I can see where this happened. I have this come up some. Am I eligible to collect any benefits from Social Security?
That's a good question.
Never worked
That's a good
anywhere
question,
outside
and
the
it
house.
comes up more than
Yeah.
you think. So the answer to that is yes, it depends. If you were married.
You don't have a blanket statement for
I
this?
know.
Oh,
Everything has a
darn.
depends.
The guy on
You
the
know,
radio I
I'm-
listen to all the time,
I'm
he's
very
always got blanket
compliant.
statements for everything. All right.
This is what keeps job security for me. But let's suppose this person never worked out of the household, and I'm going to assume that they're married to someone who did earn, who has earned and is eligible for Social Security. So the answer to that would be, just because you didn't work outside the household doesn't mean that you're out of luck. You would be able to file for Social Security benefits. The critical thing is once your spouse files. Okay, once your spouse files, and obviously you're at least age 62, you could collect a spousal benefit. The maximum spousal benefit is 50% of the working spouse's primary insurance amount, what they're entitled to collect at full retirement age. Okay, if you, as the dependent spouse, I'll call it, collect before your full retirement age, it will be reduced just like
Okay.
any other benefit. But
Okay,
yes, that's a
that's-
great question.
That is good. Anything else over there, Megan? We got another one? Like I said, we got plenty of time. This to me is the most fun because, I mean, Heather, you were saying you attended a conference, we won't name the name, but you were on a panel of other experts in different fields, and you were, I guess, covering. How long did that thing run? Did you say you all talked for 3 hours?
3 hours, and I believe it or not, I wasn't out of hot air. I could have kept going. So this is a topic that could go on.
Oh, yeah.
Because again, every situation is different. So you can, I very rarely get a question that I can say with certainty, this is the one answer, because everyone's situation is different. The rules are different depending upon the circumstances.
All right. Oh, this is interesting. And this is not unusual anymore. I was married and divorced twice. Can I collect anything from my former spouse or spouses?
So guess what my answer is to that? Well, it depends,
Okay.
right? It depends upon a couple of things. The first ingredient to collecting ex-spousal benefits is you had to have been married for at least 10 years. Okay, that's the first thing. So we're going to assume that these two were 10-year marriages or longer. If that's the case, and let's go with the fact that maybe this is a low-wage earner at first, this person can actually cherry pick which benefit produces the higher ex-spousal benefit.
Which one she liked the most?
Which one
right?
she liked the
there you
most.
go.
Ideally,
Based
the
on
one that
income.
had the higher
There you
income,
go.
right?
I got you.
So she could go down to Social Security. And I will tell you that if you've been married more than once and you plan to collect a ex-spousal benefit, you need to take both the marriage certificate and the divorce decree for both marriages, even if one of them wasn't for 10 years. Okay, so you need to take it both. They want to see it all. But so yes, the answer is assuming you've got 10 years under your belt for either or both of those. If you've got it for both, cherry pick which one's higher. Now, remember, if you have your own retirement benefit and it is greater than 50% of each of their primary insurance amounts, then unless you were born prior to January 2nd, 1954 and can do that restricted application, you wouldn't be able to collect it because your own benefit's higher.
Couldn't double dip, huh? Or triple dip?
You couldn't double dip. Now that's
Darn
that's why the rules changed a bit. That's why. So.
Okay, Megan's doing a great job over there. Let's see. Okay. Oh, I had this come up recently when somebody came in. We were doing a fact finder. When I meet with people, Heather, I'm just gathering information. This kind of came up because I was asked about Social Security. By the way, I just applied for Social Security. Right. So I'm having second thoughts on my recently started Social Security. This person turned 62. Now what can I do? I think what this question is saying, it could have changed my mind. I think that's what this gentleman was saying after an analysis.
And I'm going to assume that recently means within the last 12 months, because that's the critical ingredient. So some folks do. They turn it on, and then for whatever reason, maybe they're reemployed, or maybe they come and hear one of these things and go, gosh, I wasn't thinking about my surviving spouse. I'm the higher wage earner. It doesn't matter what your reason, but if you're within the first 12 months of filing for benefits, you can do what's called withdrawal of an application. Withdrawal of an application. You can only do it once per lifetime. It has to be within the first 12 months of collecting benefits. And what happens is you reach out to Social Security, you fill out the form. They will tell you have to pay back all of those benefits that you've collected. If you pay them back, it's as if you never started to begin with, and you get a complete do-over. So that's called withdrawal of an application.
Okay, good stuff. Let's see, Trey. Megan's getting one here. So
we did have a follow-up to the divorce situation. What if that person is still working? Can he or she file on the Social Security, and when can they?
Okay, that's a great question.
You want to
this
repeat
goes
the
back
question
to,
just in case?
Yeah, so the question was on the divorce situation, what if that spouse that's wanting to claim on the ex-spouse is still working? Can they file while they're working, or what's the story with that? And that comes into what's called the retirement earnings test or earned income limit. And on any benefit that you collect, whether it's your own retirement benefit, an ex-spousal, spousal, or survivor, if you try to collect a benefit prior to hitting your full retirement age and you make too much money, in other words, too much money is defined in 2019 as $17,640 if you're in any year before the year that you're going to turn full retirement age. So if you make more than that, then you can theoretically make so much that you aren't able to collect a benefit at all, because what happens is the excess income above that $17,640 reduces the amount of your Social Security benefit by half of that excess. So sometimes people will go to file and they'll say, how much do you make? Well, I make $70,000 a year. It's going to wipe out the benefit, and they'll say, come back later. There are some situations where they still will be able to collect a benefit. They'll pull back some of them because they're making too much, but not enough to eliminate the benefit. And eventually they do get that money back. It comes back to them at full retirement age. Social Security keeps track of the amount of funds that they pull back from the benefit amount, and they recalibrate it. So I guess the answer to that is it depends on the income of that person trying to collect the ex-spousal benefit, and whether or not they are before or after full retirement age. That limitation goes away at full retirement age. there's no earned income limit.
By the way, in case people have to jump off here, can we put up the slide, Megan? I'm throwing something at you. I know you're trying to type in questions of how they can contact us. Is that, can you put that up real quick? Yeah, if you have, would like to meet with us in person, again, we're a full service financial planning and retirement planning firm. We do have Social Security folks on staff that can help you with a lot of questions beside 401k rollovers, money languishing in the bank, Roth conversions, anything you want to talk about, we can talk about. But all you got to do is click on this link right here, or you could give us a call at 877-499-9255. We have offices in Bowling Green, Louisville. We now have an office in Lexington, Kentucky. So we can meet with you. In most cases, I can meet with you in person. You know, it's kind of rare, Heather. I know you're around the country, but you know, I have 11 full-time employees. We have over 2,000 clients. We've done over 4,000 retirement income game plans. We can document all this stuff. And in many cases, you know, I'm not just doing this for show. You can't find the guy that's behind all that. So I meet with everybody in person. If clients want to see me, they see me in person. So we feel like that brings value also to the table, that I've got the experience, but also have a very, very good team of seasoned professionals to help provide the service. Because as I like to say, this is not a one-shot deal, is it? I mean, retirement planning
It really is something that takes a lot. You just have to pull in so many different factors to really make a plan that thinks about the taxes, the, you know, am I still working? All of those things, the income need in retirement, what other assets they have. It really is so important to making this decision, much less everything else for retirement income.
Let's do this, because I'm sure there's still some people, more questions are coming in. So let's take a few more minutes. You're okay with this, aren't you?
Absolutely.
You got to do a workshop at 2. We got to skedaddle you out of here pretty soon, but you're good right now. All right. If I delay until full retirement age, can my spouse draw her benefit at 62, then add spousal benefits at her full retirement age to bump it up to 50% of mine? Spouse is same age. That's a good question.
That's a great question. So this person sounds like they know something about Social Security.
Yeah, that's a good question.
We already said that the spouse has to be collecting for her to be eligible for the higher spousal benefit. That in this case, it sounds like she's going to file for her reduced retirement benefit, but once he turns his on at full retirement age, she's going to bump up to the higher spousal benefit. Yes to that answer. What I will disagree with, though, is 50%. So normally, the maximum spousal benefit is 50% of primary insurance amount. However, she falls under what's called the deemed filing rules, meaning she filed early at age 62. So even though she doesn't have simultaneous entitlement to spousal benefits at the same time as her own, there is a reduction to that full 50%. And you have to be mindful of that, because she falls under, I have one file date, I started early, so now I am going to get a little bit of a reduction to the 50%.
You know what? I didn't mean, I almost got tickled thinking about
You did get tickled. I saw it.
All of these rules, and I'm not getting on the government of Social Security, they play a vital role, but whether it's politicians, government officials, I'm just picturing a bunch of people sitting around and coming up with these rules. It's almost like people ask me, well, who came up with the 70.5 minimum distribution rule? I say, I don't know,
and
but it almost,
it's like they sit
it's so
around
complicated.
And,
so folks, if you're sitting there right now going, yeah, that's just it, Tony, this stuff seems complicated. Folks, that's why we would like the opportunity to meet with you. Our job at Tony Walker Financial is to get your situation organized. First of all, find out what it is you want, and then lay out a game plan that meets your goals and objectives. We'd love to have the opportunity to do that. If you're a saver, have you heard me define what a saver is?
Yeah, no, please do it.
A saver, it's a Will Rogers saying. A saver is someone who's more concerned about the return of their money than on it. So what we do is we work with very conservative folks. If you're looking for a game plan that's reasonable, not risky, doesn't have 90% of your money blown and going in the stock market, that's not what we do. We're here to make sure you have a game plan that's safe and secure, and to make sure you don't run out of money. And this is just one facet, making sure you're taking advantage as best you can of the current laws that can work in your favor rather than just haphazardly out here trying to go it alone.
Absolutely.
We want to take one more question. Do we have any more, Megan? Well, that was the last one. So any other closing remarks or something we may not have covered? She thought, Tony, I do want to leave your listening audience.
Let me just talk a little bit more about survivor income, because a point of confusion, again, is the maximum amount of spousal benefits during lifetime is always going to be 50% of that other spouse's primary insurance amount. So let's go back to that example. Let's suppose in the previous example that he decided also to file at 62.
Okay.
So let's suppose he was entitled to $1,500 at 62, but he would have gotten $2,000 at 66.
Okay.
Is she entitled to half of the $2,000 or half of the $1,500? It depends on when she
Well,
files for the benefit,
I'm glad I
right?
didn't answer that
Right?
question real quick.
So it
Almost
depends
did.
upon when she files for the benefit. Just because he decided to take the benefit early, if she waits till full retirement age to collect the spousal benefit, slightly different scenario than the one we were talking about, then she'll get the full 50%. In our example, she had already started at 62, and so she's going to get the reduction anyway. But let's suppose she waited till full retirement age. People get confused. They think that she's only entitled then to, or he is only entitled to the reduced benefit that the spouse claimed. The other thing, are we finished?
No, you're good.
Okay,
You're
good.
You're
The
good.
other thing I'll just say is survivor benefits goes up to 100% of what the deceased spouse was entitled to collect or was collecting at the time of their death. So there's a huge difference. Again, why the longevity and thinking about break evens in terms of both spouses is so incredibly important.
And I was going to say, we have a relationship with Heather where, by the way, Lisa is our Social Security in-house expert. She's probably watching this going, hey, if Heather's going to be my resource, I don't have to do a whole lot anymore. Lisa,
Yeah.
don't do that now. We still need you working. But we do have Heather as a resource. If we do run into a situation, obviously there's a lot of things that have come up that we may just need to rely on her. And it's great to have resources like that.
Well, we need resources.
Yeah.
We're not all, we're
Can't know it all, can you?
You can't. And if you say you know everything, then you better run, because you don't. So
Yeah. Well, it's been a pleasure. We got to get ready for the workshop at 2:00. Again, if you're watching this live and you're in Louisville, we have a 2:00 workshop scheduled here. I guess I could just go online. We need them to register, don't we, Trey? Yeah, you need to go to TonyWalkerFinancial.com, click on the workshops area, and you can register for that at the 2:00, or we also have a 6:00 this evening. Heather will be doing about an hour presentation, a lot more graphics, time for questions and answers. And then if you're watching this from Bowling Green, tomorrow we'll be in Bowling Green at 2:00. It'll run from about 2 to 3:00. Again, you do need to register for that. Just go on to TonyWalkerFinancial.com, click on the workshops icon, or give us a call at 877-499, there it is, 9255. So Heather, it's been enjoyable. Can't wait for the workshops this afternoon and then
forward to
seeing
it.
you tomorrow in Bowling Green. It's been a
Thank
pleasure.
you.
Thank you. Thanks, everybody.